our final program point. Save the after-work bubbly session. It's going to be a short interview, market outlook with NASDAQ. NASDAQ Copenhagen, here represented by Carsten Borring, your head of listings and capital markets at NASDAQ.
Yes.
Have you been bracing yourself for my extremely tough questions?
I'm a bit nervous.
Yeah, I can imagine. Don't be. I will just hold you personally responsible for all the
of course
bad things that are going on right now. No, jokes aside, we were standing here on this stage a year ago.
Yeah.
And 12 months more or less has passed. And I remember in a presentation earlier today, Göran Forsberg of Cantargia, he said that the last year has been marvelous for us at Cantargia. So great for him.
Yeah.
How would you say that your last 12 months have been at NASDAQ?
They have been tough.
Yeah.
It has been tough to follow many of our clients. There's also a lot of clients who are doing good. But when I were here last year, we could see what I'm looking at most of the time, if I want to have the temperature of the risk market, so to say, I'm looking at the NASDAQ Biotech Junior Index. It's an index we have in the US on our mothership on Times Square, where we have more than 200 companies present in that. And it's biotech companies up to $5 billion. That's what we call junior indexing. Mm. And it's excluding companies below $200 million. So we don't have a lot of the small companies included. And last year when I were here, I was a little bit optimistic because I could see it has raised from the bottom of 50% up. Mm. And we hope it would continue that journey. Unfortunately, when I look back at the index right now, it's 30% down since last year. So maybe I think we have reached the bottom now, but I'm not sure, to be honest. Yeah. It is difficult times out there, especially within biotech, and it is close to my heart with biotech.
Mm. Yeah, I mean, you don't have to make any promises here today. We won't hold it against you.
I can promise I will do what I can.
Yeah, well, that's good. That's actually one of my follow-up questions. And what can and what are NASDAQ doing to support the companies that you have listed who are now struggling?
So every day we work with our trading machine, and that's not on the listing side, but we are trying to build it up so it has the best outreach to all investors. Even though that there are fewer investors in the biotech space right now, we are trying to reach them in any ways we can. And that's what we're doing every day. And in fact, if you look at our trading machine here in the Nordic, 80% of all the investors is from outside the Nordic region. So we have a good outreach for people to look at our shares. We had the earlier discussion about the Nordic being in heaven in biotech. And we are in many sense because we are quite good at bringing companies public. And that with that comes transparency and visibility. And one thing that is important for many companies to realize also is when we look at, and maybe it's also, I don't know how many private investors there are here, but quite a lot, I guess. When we look at the prices right now on biotech, they are pretty low. They are embarrassing low. Maybe if you are trying to pick it up in a venture fund or something, it could be good. But I'm not sure that venture fund can take advantage of this because they can't buy the companies for this price right now. It's so low, so the big investors in the companies will not sell off. But it's an opportunity for private investors to go in and buy for 10,000 or 20,000 kroner, Swedish or Danish, it doesn't matter. But it's an opportunity for private investors because we have we can go in and buy. But the big funds can't because you will not sell off that many shares right now.
Well, provided that you have dry powder, that is,
unless
you're at the bad end of 80% decline or something like that.
But you need to have a good and sustainable company. And it is right now important for many biotech companies to look at the cost right now and see how long can you prolong the runway with your capital. And then I think there's been said so many clever things up here the last 2 days, and I will really recognize the job you're doing, because there's not a lot of people who have focused on these small companies. But it is important to look at the cost. And it's also important to look at your investor base. As you said, I told you so earlier this day. And we can all reflect on a lot of things, but we just need to realize the last 5 years or 4 years or 3 years, there's been a lot of capital out there without any demands. Mm. Now you have to look at your investor portfolio and find clever people to support you for a longer journey. And they are out there. It's not easy to find them, but they are out there. Mm.
So like you alluded to earlier panels, where then specialist investors, they might have the view that you need the good science, and they look at science. They have scientific experts doing the due diligence on the science side to spot the gold nuggets. But in all fairness, NASDAQ and the other exchanges have brought in quite a few early stage companies, and you could argue that you have done the due diligence on the financial side and on the administrative side and so on to keep the hygiene level there straight. But the science part, if there are projects now that don't really attract specialist investors, would it be possible to in any way screen that part of companies? I'm thinking about the future now. Tough question.
Yeah, it is a tough question, because it's very dear to our DNA to help companies to raise capital. And when we invented First North in 2005, it was to help small companies to get access to capital. And I think maybe we have not been good enough, even though I think we have tried, to warn private investors about going into everything. But there is a big disclaimer on the front page of any IPO prospects or anything else that we are bringing to market. But we need to be better and keep on investing in the private investors as well. And we are doing that, and you're doing a good job, and we are sponsored here. That we need to help private investors to understand risk. But that being said, it was not because I don't want to talk to a lot of angry investors, but it's not often that I hear this. No. I hear from, you have to ask me this question, and I hear from journalists, and I hear from especially VCs and everything else. They think they are much better, and boo-boo, or they're too early going public. But I can understand a business leader who wants to take the company public when the money is there, because you can stay longer with your share, and you can take your company to the next level. And in all fairness, there was just too much money out there. If we look at all the VC's investments in biotech, they are slaughtered. There's a lot of VCs pulling out of this space as well. Even private equity companies went into to biotech. We have never seen that, because they wanted to go in and get rid of some of the money. They had too much funds. And if we look at our IPO index in the US, and we look at companies that are got listed from VCs, they are down 70% over the last 2 years. So they are not doing better as many other companies or founder-driven companies in the Nordic. And it's not to say we are without anything, but it's the way it is. There was too much money out there. We can see that. We knew it. Many are. But
Too much money. That sounds like a huge problem.
That's not the problem now.
No, it's not. That sorted itself out, so to speak. So about you mentioned the IPO, and I can imagine though during these boom years of many companies seeking to go public and doing the IPO and bringing capital, which was plentiful. I imagine you were, as a listing manager, you were probably one of the most popular guys in the room at the parties. And how's that nowadays?
Yeah, but I don't see myself in that as I'm running infrastructure, and you will always have need for infrastructure. And we are helping the companies we have now to perform better and to have a platform to raise capital on. And that's our purpose right now, to try to make things better. And I've been in this game for so long, so I've seen ups and downs so many times. So the only thing I can hope for right now is that we will get faster back on track.
But that was actually one of my next questions, because we've asked several different kinds of experts here what they feel is the signs to be looking for the current headwinds to sort of die out and a change to come, a positive change. Then with your long time experience, and I'm sure you have some analytics team, especially in the US, then who have their lookout very far ahead. What do you see?
It's not easy to see anything right now. And I was also, I heard the panel with all the investment bankers. I used to be an investment banker myself, and I'm talking to a lot of business people right now, in big companies as well. And what I hear from investment bankers, to be honest, they don't know anything more than we do.
What?
Sorry to say. You need to look at your own risk profile. You need to look at your own stomach field. What do you think about Christine Lagarde will do? Today she said she will keep the interest rate stable for now, for the first time in 2 years. That's a boom for our share prices today. But next month, what will she do then? So it is all about looking into yourself. Do you think you have a decent company you can bring public? And we will see IPOs pretty soon, because as they also said, there is private transactions going on right now. And that means that if the M&A market is running, you have some kind of agreement of the price of the companies. And now we just need to have that into the investors to say, okay, we need to pick this up. There's a M&A going on. We need to be on this journey as well. But they are so disappointed, many of the institutional investors right now. And they also need back to some of the VCs who are standing and say, hey, it's good time, we can buy cheap now. But they have brought a lot of company to the market as well. And there's some trust they need to build up to the institutional investors right now. But I talk to, when we look at, back to your question, what are we looking at? We're looking at some of the big companies going into to the US. And we have seen quite a few the last couple of months. And one of them is completely out of this, but it's BioStock, the shoe company. And it's just to make my point, and it's not to be quoted somewhere. But every European and US banks were involved in that. There was a list of so many banks. It didn't reach the IPO price at any time. It has been trading below IPO price. So back to, are they clever than us? Are they, 15 banks, and they don't even get the IPO price on the first day in the opening auction.
With a product that you can actually understand.
You can see it, you can feel it, you can walk on it. And then we have ARM as another technology-driven company, and it's also trading below. Back to the VIX, the volatility index they talked about earlier. But it is back to, what do you believe? Is it the right moment for your company to go public? And can you find an investment banker who dare to do this and say go? I don't know.
So well, dire times spark changes in many different ways. And one thing that I learned during this event, among many things I've learned, was that there is a, well, small but technical, you could say, change coming for some of the companies at First North, for example. And that has to do with what you were talking about, the trading and the infrastructure, I guess you could call it. The fact that illiquid stocks will be not traded as normal, but actually in some kind of auction system instead. Can you briefly, that's a detailed thing, but can you just briefly
It is
explain?
a small detail, but it's important, especially for private investors. We see a lot of companies, shares trading with a big spread right now. As a ask and bid price is too far away from each other. And if you in 2 quarters have a spread of more than 7%, you will be transferred to a list by I guess it's the middle of January. We will take off. We call it auction trading. And there you will be traded 5 times a day. And it should hopefully help that you will gather the ones who want to sell and buy in these clusters and to make a better price at that time. But to be honest, we don't know how it will work, but it's also a part of us trying to modernize our trading platform. We don't necessarily always need to have, you need to trade from 9 to 7 or 5:30 here in Sweden. Maybe we can change things. And in Sweden, you know it because the A shares has been traded in that way.
A shares, okay.
Yeah, for quite some time. But it's also encouraged companies to look at themselves and say, okay, I need to take care of my investors. And how do I do that? If I don't have the liquidity to have a narrow spread, as if I'm buying a share or selling a share in a company with a spread with more than 7%, I'm losing 7% day one I'm buying the shares. That's a lot. That's a lot, and the only one who can count for that is the CEO of the company. So if I'm a CEO of the company, I would like to have narrow spreads. If I can't get it myself in my share, I need to maybe get a liquidity provider and pay for that.
If you're a CEO of the company and buy shares too aggressively, then you have a big problem.
Yeah, that's fair. But you as a CEO, you need to pay me back.
Yeah.
If I'm losing 7% day one, you need to first build up the 7% and then add 10% on that before I'm happy. That's 17%. That's a lot.
Yeah, you're better than me on maths. But so I'm sure that's not going to be popular with the day traders, though.
No.
But that's their problem.
That's their problem.
Yeah.
There's plenty of other shares.
We have
more than 1,000, so I guess...
we have problems of our own to worry about. Yeah. So we are running out of time, but is there anything, like I've said to previous speakers, is there anything positive you could add to instill some hope? I mean, I think that companies and investors alike are, grasping for positive signals.
The positive thing this day is that Christine Lagarde didn't raise the interest rate.
That's one good thing.
That's really positive.
Yeah.
And then we also need to have the inflation down. Because if I'm on top of my 17%, also have, like you have in Sweden, 6.5% inflation, you need to build that on as well. So it adds up. So we need to have the inflation down and the interest rate down. And then we, as a private investor, as I started to say, you need to look at the opportunities right now and say, okay, let's buy some shares. And then you will keep the CEO happy as well, because there will be right issues and everything else. You need to support these. And I think there are opportunities in these companies. One thing I said last year, and it still goes for this year, is that biotech is very interesting in the sense that many companies, due to high interest rate, high inflation rate, have a very bad business model right now. But biotech is the only sector where you get better day after day because you're closer to inflection point of your search.
Provided that you can afford to
yeah,
get
and you
there.
reach there and you don't got caught in a 2B or anything else. But it is tough for biotech right now. But we've been here before and we will survive.
It's going to be interesting to see when you come back next year.
Yes,
To see
that's a
if
promise.
we have a bigger smile on our faces.
I will
then.
have a big smile next
Yeah.
year.
I'd like to thank you, Carsten, not only for taking the time to talk to us, but actually also to NASDAQ for supporting the BioStock Life Science Summit. Thank you very
welcome.
much.